Alright, cool. Can you guys hear me? Let me know if you guys can hear me. And if you guys can see my screen, please. I'm gonna get myself situated. Alright, cool. Alright, well, I guess I'll go ahead and get started. Because okay, perfect. This is gonna be recorded and posted anyways. But in the end, when it comes down to, I have no idea. Well, let me think. I guess since this is gonna be recorded anyways, I just go ahead and talk about a little bit of everything. So, both of you guys, or at least the people within our group or our Discord, have heard about, or have heard me teach them about what's it called? Understanding. Hold on. Sorry, my little dog is around here. I'm gonna edit all this out. But anyways, you guys understand this, right? Let me know in the chat if you guys right here. This is really just for us. This isn't gonna go public or anything like that. But Azim asked me if I could record this for him. So let me know if you guys want me to go over what understanding like a candlestick is or a bar. You guys understand like who's in control, right? Whether a green bar shows buyers in control. Simply put, red bars are sellers in control. Correct? Yeah. Okay, perfect. Okay. What I will get into later, though, and more in depth, is these questions that I feel like are super important in understanding. A lot of times people will go ahead and say that, a green candle is just showing, buyer pressure, right? And inflation, higher demand at current supply. Red candles, simply put, are, at current supply, a decrease in demand, right? Sellers in control, etc. They may say these very, very simple things, and they just say, yep, that's a green candle, yep, that's a red candle. But what they fail to recognize is two other things, right? One thing they're saying is what it is that they're seeing, but they're not able to understand or recognize how the candle formed or where it formed, because that's also super important, and how did it get there. Those things are really, really important, but I'm going to get into those in a different video, or a different time, honestly, because that takes a long time. But just keep this in mind. Take a picture of this, because take a screenshot at this right here. We'll be getting into this, and I'll be introducing this more often during our Tuesday sessions and Thursday sessions as well. Even then also just on one-on-ones as well. But overall, we are going to be looking at price action strategies, right? So the inside bar pattern is a price action strategy, and you need to have a healthy amount of volume for price to move healthily, right? So on the left-hand side over here, I have an example, Intech. Both of these are 1-minute charts. But if you take a look, it looks choppy. This is how stocks with little to like no volume really in comparison to the rest of the market. This is how they look like. They look ridiculous. You can see over here too, price is at 46 cents a share, which is a common theme with stocks with low volume, right? Penny stocks. And these are really exaggerated examples here. So you got Intech over here as a bad example, or you got Microsoft over here, $1 trillion company, trading at $133 a share. Also a 1-minute chart, but it's a lot healthier, right? You can see price moving healthily. It moves a lot more in relation to this one. There's a lot more candlesticks. Each candlestick moves a little less, but there's healthy movement. With price action strategies, volume it goes hand in hand with price. You can't have an actual price action strategy with stocks or with positions or with stocks period, but companies that have low volume that aren't moving healthily, right? So one thing to keep in mind I know Cameron, I spoke to you about this, you too, Emmanuel, but it's making sure that there's three fundamental things in seeing value in a stock. It's overall price direction, liquidity, this is in no order, and opportunity cost. When it comes down to price action strategies, you have to make sure that there's volume there, that what you're looking at is liquid. I remember one member in our group, I think it was last night, he was asking why does the inside bar pattern show up with Forex so much? And the reason why is because Forex is such a bigger market than just the American stock market. Within Forex, there's many more dollars being churned, coming in and out of the market than there are in the American market. Therefore, that comes to the implication that things move a lot healthier in Forex markets. So that's just that. I'm just answering that question there. When it comes down to price action strategies, just to reiterate again, you have to make sure that there's a healthy amount of volume, that price is moving healthily, that you don't see these Doji bars, right? These little white little lines that are, hey, no worries, Kevin. But yeah, price action need to be healthy stocks. All right. Now I'm just diving right into what this inside bar pattern is. When you Google it, you will see it called an inside bar pattern or called a Harami pattern. Any one of these they're exactly the same thing. It took me a long time before I recognized what the hell a Harami pattern was, but they're exactly the same thing. Now, people play these different ways, to be honest with you. But this is what I'm sharing with you guys is, in my experience, the best way to play these inside bar patterns. Now, I do have a lot up here right now, but essentially what you're gonna have is one big bar, right? Bar is another word for candlestick. What you're gonna have is one big bar, whether it's a bullish candle or a bearish candle, whether it's an inflation on price or a deflation on price, it doesn't matter as long as it's one big bar. The less the wicks, the least amount of wicks it has, the least amount of error of margin it has. You have to think about this price action strategies, you have to think about them in terms of supply and demand, and in terms of, or just with an understanding that every dollar in or every long position is an inflation of the price, right? We're creating a pressure from the downside. If I buy into X, I am creating a pressure from the downside, right? I'm pumping up interest, my dollars, inflating price in a very, very, very small and insignificant way, right? In comparison to the market. On a seller side, when I am removing my interest, removing my dollars, taking a short position, right? Betting against the value of something, I am deflating price or creating a pressure from the upside. My pressure is up here, I'm pushing down on price. Does that make sense? Let me know in the chat what you guys think about that. But you have to be able to see the market in this way when it comes to price action strategies. The reason why is because understanding this bar and understanding what I just said, there's a lot of one-sided volume here, right? If there's like a big influx of volume, which we'll see shortly in our examples, you'll be able to see like, hey, buyers super controlled this time frame, whether it's a 5 minute, 1 hour, 1 day, 3 day, 1 week, 1 month bar. Buyers controlled that time period right here. It would be sellers controlled that time period, and the more wicks there are, right, means the more battle there was. It wasn't as one-sided. We're looking for one-sided battles with these bars, mother bars. They're huge. We're looking for the ones that have the least amount of wick. Consequently, inside bar patterns come from inside of the bars. If you see right here, these lines, these arrows are basically made at the bodies of the bars, right? So just taking a back look over here, we're taking those arrows, right? It'll be support and resistance at the bodies of the bars, not at the wicks. At least this is how I play them, and what I play them is a little bit more safely and securely. With every person and with every eye, there's a little bit of subjectivity within every person's price, or let's say strategies. At least this is the way I play them, and it's a lot safer. And that'll be up to you guys too. But I'm just trying to share my experience so that we can see things on the same page and be able to build upon this idea as well, this strategy. So these are the bodies, wicks, right? So, whoops. Resistance will be at the body, at the high body. Support at the low body, not on the wicks. When the next or the following candles open inside of this range, this creates an inside bar pattern. We have our mother bar, which tops it off. It creates the consolidation period. I will tell you guys about the 3 truths that Azim was talking about earlier in the chat and Discord. And okay, does this pattern require multiple mother bars or a single spike counted as mother? What I do is just one. The only reason why I have these 2, Kevin, is just to let you guys know that it could be either a green candle or a red candle. It doesn't matter, as long as it's significant in size and the least amount of bars. I'll be showing you guys in the examples on Thinkorswim before we end this session. Let me know if you got that though, Kevin. But okay, so we have our mother bar. It's one of these, not necessarily both. It could be green or red, right? Bullish or bearish. The inside bar pattern happens as a consequence of this mother bar. When the bars on the inside, or when the bars open in the inside and play within this range, right? In between this resistance, this support. Okay, awesome. The way that I play them is on a break, on a close below either resistance or support. Oh, shoot. On resistance or support. It closes below. It closes. It finishes that time period and it closes. Not just a break like these wicks. Not just a break. It needs to close, and then I play on the open. That's exactly what I do. Close, open, I play it. This one is a bearish example. On a bullish example, when we're trying to play the upside, still same thing. Wait on the close, then I buy at the open. The open is a little more, I feel a lot more confident, and it's basically acting as confirmation, right? We broke our resistance, and we opened, right? Ricky Gutierrez says it a lot of times. Many different traders reiterate this a lot of times, and they say, wait for higher highs and higher lows. This is exactly the same concept, right? You break, yes. You show that you broke. You close, yes. Then on the next candle, you opened and you're still in the green, right? And the next one, you opened and you're red. And the more wick there is, right, the more margin of error on the play. Healthy bars have the least amount of wicks, or none at all. When it comes down to it, Doji bars are like bipolar bars. I'll show you guys how to play these as well. These are so fun to play as well, these Doji bars that look like this. They're either red or green. Super, super fun to play, just like these inside bar patterns. But I took a few screenshots of what I saw last week, and then I'm going to pretty much wrap this up. And if you guys have questions, let me know, because honestly, This is the first time I had like a session where I wasn't bouncing off of anybody else, which I love to do. So let me know and direct me, help steer me in the direction you guys would like me to go as well. So feel free to text in this chat as well. But let's take a look at Facebook. I believe this was what? This was on the 23rd, right? That's at least what it says here. I love to play 5-day, 5-minute. It could be 10-day, 5-minute, as long as the candlesticks are 5-minute intervals, right? I love to play these intraday. So over here, where is it at? Here's an inside bar pattern. I labeled it with that yellow arrow. This one has a little more wicks, and you'll see the margin of error. This one opened inside the range, played inside. It broke, right? It closed below. It opened below. I would have played this. The thing is, when there's more wick, there's a higher error of margin error. Also, take a look at this bar in comparison to other bars in size and relativity, right? When you think about it in terms of buyer versus seller pressure, there really wasn't that much of a battle here, meaning that it was more compressed. If I talk with my hands a lot, but I'm like, if you guys could see it, but it's a little more compressed here. It's not as one-sided. Just because of time, you'd have to believe me at this moment too, and I'm going to continue to work on content to help you guys and go deeper into this as well. I'll make videos and post them so you guys can go back and forth. But anyways, margin of error. This is one that, let's say on a scale of 1 to 10 on my confidence level, this one would be like a 6 or 7, right? Closed below, open below, retested, right? Still started trading inside the range again. Finally, close above, open above, retest, strong. It stayed above that resistance, which now became a new support. Ended up being a nice $1.6 play. Next one. On this chart right here, you can even see another inside bar pattern forming right here. So this one right here, a lot bigger, right? Bigger than the first mother bar. This mother bar is a lot bigger. Volume also supports our buyer versus seller battle. I took a screenshot of this one as well. We create our resistance and our support at the bodies. Our mother bar was confirmed, or our inside bar pattern was confirmed when this following candle opened inside the range. Inside the range. Inside the range. This is a type 2 close, Cameron. Remember these kinds of closes? We got type 1, type 1. No, excuse me. Type 1 close, type 2, 2, 2, 2, 2, 1, 3. You don't have to worry about that, you guys, for the rest of you guys. Just I hope Cameron was able to catch this, though, when it comes to support and resistance lines. But anyways, just confirming that this line right here is support, that it is significant. Also, volume is also confirming this pattern as well, that this mother bar. What we do is we miss a bunch on this, right? I always wait for confirmation. Nothing wrong with waiting for confirmation. Close below, open below. It ended up running $5 on the downside. I think I played puts on this play, and overall, I think I got like a $4. I was able to capitalize on like a $4.6 drop, and it was incredible. That was incredible. Let's take a look at some charts though. I want to show you guys. 5-day, 5-minute. Everything that I found last week. Every single time. I said it was gonna fall here. Okay, yeah. So, what is this? Monday over here. Here's Monday, and I only left. I can pull up different drawing sets as well, but I only left up the inside bar patterns that I found. So, this one, not an inside bar pattern, right? Not a mother bar, because it's not playing within its range. Not playing within the range. Here, it kind of counts, yeah. Inside, well within the range, open above, closed above, totally fine. Little bit of move, 24-cent move, not too bad there. But also when you take a look at its volume and its size and relativity, error of margin. Both things need to be present. This one not either. Slightly. It opened a little bit underneath this red candle's close. And my computer's going a little slow. Broke above, held. This one, errors of margin on the wicks. Open above, closed and open. Oh, let's say closed above. Excuse me. Open and closed above. I would have played right here. 30 cent. When it comes down to what's it called? To option plays, I love it. But then this also goes into just understanding one, the liquidity and what you're looking at, right? So SPY, I love to we like to look at things that have, a good profit margin, and we like to be able to recognize our margin of risk as well, right? So I love to play companies or positions or plays, whatever. SPY, Alibaba, Roku, Snapchat, any one of these bigger companies that are like well within $100 to $400 in price, right? Price of share, like share price. Just because a 1% move, for SPY, for example, is a $1 move, right? A 1% move for a $300 stock is a $3 move. Let's keep looking. When it comes to options, we want these dollar moves in our favor. Here's another one that I found. Inside bar. Big in relevance. Oh, what's it at? We just lost it. We were looking at a 5-day, 5-minute. So, inside bar pattern. Played within the range. Close below, open below. Even from here down, right? $2.6 move. Nice capitalization on that. Here, not a mother bar, not a mother bar, not a mother bar either. It opened above. Next mother bar, next big bar. This one does count as a mother bar because the following bar is inside the range. Inside range, inside range. Also, type 1 close, type 2 close, type 2 close on this resistance. It's still within the range. Open above, close above. Wait, excuse me. I keep getting those confused. Close above, open above. Descending at 1.6. Let's see. Was that the end of all that? Sorry about that. I think this one was going slow. Let me know, guys. What do you guys think? I need some class participation. Oh, here we go. So yeah. Close above, open above. It comes back, retests. I would have kept this. I would have kept this. I wouldn't have sold. Not unless it closes and opens below. Ended up on the day, 88 cents, totally fine there. This is just SPY. We'll be taking a look at Disney, Roku. There's every single day there's inside bar patterns. Mother bar. Because this one closed or opened and closed within the range. Same thing here, within the range. Opened above, closed and opened above. Would have played here. Decent 1.6%. $1.6 move. Not a mother bar. Mother bar here, strong one. Closed and opened below. Almost near a $2 drop. Take a look at Disney. Oh, actually, I called that way too early. Here's a close below, open. Has a near $4 drop. Let's look at Disney. See, learning this again, blowing my mind. Okay, here. So your play comes from the first inside bar, depending on which direction it's opening in. It doesn't matter what direction it's opening in. Well, let me see. Hold on. Let me read your question. So your play comes from the first inside bar, depending on which direction it's okay. Not from the first inside bar. It'll come from the break of that range. I play off the break of the range, because to me, when I first learned this, I try to play within the range a lot, and honestly, inside the range, it's like anybody's territory within the range, really. At least that's the way I see it. I think about it like a car. Inside the range is the road, and cars can drive anywhere within the range, really. But down here is a valley, down here is a valley. Once it breaks that rail, right, it really starts to tumble down. Same thing for, I'll find you some bearish example. Well, yeah, like this last bearish example, right, for SPY. And the thing with this pattern play as well, at least in my experience too, it's really, really hard to figure out when it's going to stop, at least for me, unless there's an actual, reversal, like a reversal candle, and then there's confirmation on that reversal candle. Then I'll be able to tell, like, hey, this is actually, the volume showing indication as well, and that reversal candle on top of that confirmation, letting me know, like, hey, okay, now's a pretty good time to pull out. I'm able to recognize where, the institutional buyers and the AI algorithm is saying, hey, we already hit our target, let's turn this thing around. When it comes down to price action, though, right? I don't play off that first inside bar, right? So this one's green and it doesn't come up green at all. This one's, this mother bar right here, which for the beginning of the day, totally fine, even though it's not super significant in size. This one was green. There's really no indication, though. Like, this one right here was green, but it ended up failing terribly, right? This right here was like a near $4, like, pounding. What I do, though, is I do play off the support and resistance, or basically the range of that mother bar. I wait for a break. I wait for it to close, not just break, really. So I'll just say, I wait for that thing to close outside and then open, right? So it's like, here's that range, right? This dotted line. This red bar closed below, and then it opened, right at the line, a little bit above, technically. I still would have played this. Excuse me, it opened here. I'm so sorry. It's been a long day. It opened here, closed within. It closed outside of the range. That's what I would be looking for. I'd keep holding it, holding it, holding it. It retests this range, right? It retests, but it finds failure. When I would pull out, so this is what I would do if I pulled out. If this turned around, right, instead of it going down and just went straight back up, right, and recovered somehow, I'd wait for it to, close above here. If it was this green candle, close above here, and then open again inside this range again. Then I know I'm out. Something like that, usually, I'd pull out. I mean, let's see, the error on this is 0.08, 24 cents downwards. Totally fine. So far, though, on these plays, at least on these ones that I've been finding, right, this mother bar, this one counts too, but this is in support of that one. We have this one technically could be right, because of volume. I don't like the error margin on the wicks, but still the same thing. This would be one that I would call in support of inside bar pattern, because it's within this inside bar pattern. See, like this initial move, this one is within. So I call that that's just me just calling it an in support of. There's another pattern, I believe, in one of these I show you, and it also confirms the continual movement. Let me see what you guys are saying. What do you look for when looking to exit? So, Russian roulette inside the range? Yes, right, exactly. It is Russian roulette inside the range, at least in my experience. I don't like playing the range at all. I found it so much more better to wait for that confirmation, wait for it to break that range, wait for it to close above, then open. So like two bars, basically. Once it breaks that range, once it closes out of that range, and then opens out of that range, that's where I'll be looking to play on that open, on that second bar out. But, yeah, exactly. So inside that range, Russian roulette, right? Because inside the range, the car can drive anywhere at once, and really inside that range sometimes could be like $1 to $2 ranges. Like, let me see, inside this range, it is like a near $2, 1.8, $1.85, right? Inside this range. For me, that's way too much risk because there's no real direction here. The car can drive wherever it wants inside this range right here. One thing that comes with this, like a con to this pattern, is its lifespan. I have yet to still find out and to create notes for how long it can play within the range until it's still valid. That's one downfall to this. I do have a few examples that I totally forgot though. Let's see. We took a look at Disney, but I don't think we broke anything down for Disney. Does this work for lower cap stocks as well? I think you missed it from the beginning, but here's one lower cap stock, and here's my 10 cents on whether or not it works for penny or micro stocks. A stock really has to have a healthy amount of volume when it comes to price action strategies. And so I have here two very, very, very what's it called? Exaggerated examples here with Microsoft, the $1 trillion company, and Intech, a smaller company, not necessarily a bad one, just a smaller company, whose price action, as you see, isn't as great. I'm not going to say it's bad, but it isn't as great, right? So here, when we take a look at, average volume for Intech, I guarantee you it's going to be extremely, extremely low. What you want with price action strategies is healthy price movement, is that is interest, right? Like buyer and seller interest, just people interest in that stock. Price needs to move healthily. You got a huge, huge, huge difference in a 1 minute chart as well for Microsoft. There's a lot more candlesticks. It moves a lot healthier. So what I look for technically is these larger cap, mid to large cap stocks, mega stocks, mega cap stocks that have healthy movement, that move healthily. And you did tune in a little late though, but when you come around to looking for inside bar patterns or just trying to find Google forums or blogs or whatever, you need to. Oh no, not need to, but a lot of people do recommend using inside bar patterns in Forex because Forex has a lot more dollars coming in and out of the market each and every day, whereas here in the American stock market, it's not as big as the Forex market. Let's see, the volume makes sense. Do you have a general range of volume that you need to see? No, actually, not yet. But I do have a criteria for stocks. I do have a criteria for stocks. See. Super good questions. Okay, so now to answer your question, like what do you do when you look for an exit? This comes back to just overall good risk management and having clear and concise goals. I know I've worked with Cameron and a little bit with you too, Manuel, but one of the things that I look for is, let's see, it's just if I hit my daily goal or not, right? If I'm in line with my weekly goal, which for everybody is going to be a little different. So one thing that these bar patterns, or at least the way that I see, or the way that I'm using these bar patterns, they don't really show you how long the trend is going to last, right? So here's Disney. I think this was what day was the 20th? I don't know if it was this week or last week, honestly, and these are my original drawings from this day. I haven't moved anything, and I can see that you can kind of tell, but okay. I played this as the mother bar, and there was a big margin of error here, right? This big wick. I played it though still because of this influx of volume closing, the day before and coming into today or that day. It was still healthy. It was still really strong. So I was like, you know what? I'll go ahead and count this as a mother bar, and I'll take my risk, right? And there's actually a trading worksheet that I need to show you, Kevin. It's actually super badass. But okay, so we got our mother bar, inside bar within the range. So I was like, okay, yep, confirms it. Inside, 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 inside. I think when you take a look at the line graph, it'll show up like a pennant pattern. Well, let's continue though. Inside, inside, inside the range. We have a reversal candle. But anyways, it pivots, opens above, closes above. I'd play here. and I found this. What I didn't do is play all the way out. I just kept the, I kept this. I got anxious. I played this. What is this? $1 move. I think in total, what does that say? $1.20. How much was that? I don't know. I can't tell. $1.60. Like $1.60 move. Next inside bar pattern. There's not one in here at all. Here's within range. Within range. Downside. It's funny. Mother bar inside. I don't like the size of this, nor the volume. I wouldn't have played this. I wouldn't have played this at all. That would have been risky for me. This one right here. Technically it counts when it like based on looks, but me personally, the risk, the stuff that confirms the strength of this pattern, I wouldn't play this just because that volume wasn't there, nor the size and relativity wasn't, or maybe technically towards the end of the day, price is compressing. Big move. Probably. That would be an iffy. The following day and opens in the morning. I played this. Volume. I played this really good. This one right here was one of my favorite plays on the day. It opened above. I mean, it closed above. It opened above, and I bought in here. When I bought in, I was at a loss, but this third candle, it closed above. So I was like, you know what? I'll stay in. It's totally fine. So I ended up making a really, really decent play here when it comes to options. I love these plays. I love them. These, take a look at this bar. Volume fell like crazy. I wouldn't have played it. It's also within this range though too. So let's say like the aftermath of this inside bar pattern. 20 was last week. Okay, cool. Thank you, Cameron. I missed the part of margin of error. Can you explain that, please? Oh yeah, no problem, Kevin. So margin of error. So the more of a wick on the bar, the more error margin. And the reason why I say this is because when it comes to price action strategies, you really have to think in terms of supply and demand. Think in terms of like a constant battle between buyers and sellers. When you're playing technical indicators, there's a different kind of perspective you need to take when you're playing those technical indicators. But with price action, what I found that helps me a lot is keeping a mindset that every dollar that I put into a stock inflates the stock, right? In terms of supply and demand. I think I have a little bit over here kind of breaking that down, right? So you can read that, but I'll be talking above this. So when I buy, well, just think about like Apple products, right? So like Apple phones, iPhones, things that are in high demand at a constant supply, inflate in price, right? Because more people want it. We're doing everything based off scarcity at the end. Same thing with stocks in a way. Stocks have a limited inventory. They really do. There's only so many shares outstanding when you take a look at company fundamentals and stuff like that. Hence, further to support what I'm saying. I mean, stocks do like reverse stock splits where they cut the amount of shares, reverse stock splits, and just regular stock splits too, where I'm not saying which one is which, but where they cut the amount of shares, inflating price, or they increase the amount of shares and reduce the share price just to make things a little more either interesting for buyers or less interesting for buyers, right? But sorry, I'm getting off on a tangent here, but you have to see the market as a constant battle between buyers and sellers. You really have to. So when it comes down to these wicks, right? Where is that? Big buyer. big buyer presence here. If it was red, it'd be a big seller presence here. They won that big battle. Things like this, stalemate. Stay away from it. These don't really count as much as like as inside, like as mother bars. Really, volume has to go in play, and we're looking for a one-sided direction here. Just one big move. If it's a green bar and it still goes off on the bearish side, right? We play the downside of the stock, makes a downside move out of the range. It's okay. The color, or like the direction of the mother bar, doesn't really have any implication for the way that it's going to run, as long as it's just big battle happened here within these two price ranges. Like where's this, you know, big battle here, buyers won. But what's important is that there's like there's methodology in the way that everything's going on. So opened here, significance, and it proves significance, right? Type 2 close, type 1 close, type 3, everything within the range. We break that range, open above, inside bar pattern. Absolutely, yeah. So you remember when I was telling you about the whales in the market were basically the minnows. Absolutely. What I'm gonna do is probably send this as a close. Let me know what you guys think, because it's almost 6. Let's see though. This could have been so much cleaner. I thank you guys for having patience with me though too. Let me know what you guys think. Ooh. Also, I'll go ahead and introduce this to you guys too. Let me see. Okay. Within our Discord, you go to, I'm outside by the way, if you guys haven't realized, I'm on patio. But okay. So go into our Discord, and underneath Education Center and Resources, go over here to Trading Spreadsheets. And once my stuff loads up, be able to see this. Let me know. Let me see some thumbs up. Okay, where's our stuff? It's awesome though, doing a different way with working so much. Yeah, absolutely. So I'm gonna hear about you guys this way. What I'm trying to do right here is not go super in depth, more so than I am trying to just introduce you guys to this this pattern and this strategy. I have still a lot more to test this with, but these past, I think I've been playing this for the past month, and it's incredible. It's incredible how much consistency that this strategy has, and how, let's not say easy, but how simple it is to be able to recognize it once you understand. Once you're able to recognize this pattern, it becomes trading becomes a lot more simpler, and it helps me a whole lot when it comes down to options trading. It's incredible. With this strategy, I was able to have like 60% trades, 100% trade, 200% trades right on that trade over there when I had that $4 move down where we played the downside. It was incredible, super phenomenal. For anybody else that's in live, let me know. But I think that's pretty much gonna wrap this up. I wanted to know if I just wanted to at least introduce, throw this out there for you guys, to introduce you guys to this strategy, because I feel like the more eyes we have, and let's say the more perfect. So I feel like the more eyes we have, and as a group collectively, when we have a firm foundational understanding of what to look for, it can help other people within our chat or within our server, grow their accounts, because I can only see 1 or 2 things during the day, right? So I'll have alerts for Disney. I think Friday I was playing, I forgot what I played Friday, but one of these not too long ago, I got really frustrated because I had to leave my desk, right? And I really only had alerts for like 2 or 3 things, and I missed out on really good plays. Every single day there's a good play in something, right? Many times too. So I feel like having multiple eyes, same foundational, understanding will help our group as a whole grow exponentially, right? Just take off, help their accounts just grow, explode in a good way. But I'm going to go ahead and sign off, guys. Let me know what you guys think. This will be posted, into YouTube. And this is the very first time I had a live session without, being able to hear somebody else. So it was a little different for me as well. BA, yes, it was. Yes, it was. Yeah, I didn't even get to play that. Let's take a look real quick. Let's take a look at BA real quick. Where the heck is my stuff? BS. Would have missed that move. At least I would have. Bar here. Mother bar. This one played inside its range. Opened and closed. And this is also a reversal candle as well. So super strong price action indication here. Mother bar and reversal doji. Super strong. I would have played this. Well, seeing this volume, I wouldn't have even waited on this one. Strong. Ooh, $8 move. That would have been crazy. $8 move there. I mean, but I know once I enter this, that my account is going to be green, right? Waiting for this confirmation, waiting for this pattern instead of playing this first bar. Being able to recognize this and play it the way that I want to play it, I make sure that I open my account, my position, that I open my position in the green. The worst feeling in the world is opening a position in the red, because then you got fear going against you, right? It's like, oh shit, did I jump the gun, right? Did I get in way too early? Or am I freaking dead wrong? That's what happens to me, at least when I open a position in the red. And then I also have, well, really it's just fear. The things that lead into this is FOMO. Always make sure that you have your FOMO on hold, that you stick to what you know, that you stick to the strategy, and it will work in your favor. So here, nice $8 move. Even if you waited until this confirmation bar, $6 move. That is incredible right there. Let's see if we can find something here. Technically, right, if you wanted to play this one, it closed below and opened, but it was on the green side. It had no wick showing a further down move. This one has a little bit of margin for error. Just pay attention to its volume and relativity as well as its size, right? We got this one. Let's remove these, or let's just move these over then. So bar there. We got resistance up there, support down here, played inside the range, closed below. I don't know. I would have missed out on this technically, but the return would have been phenomenal. $10 move there on the downside. I would have waited here just because the volume wasn't helping out on this bar. I would have waited here, but it's still a $10 move. That's incredible. That is literally crazy. And once it goes in your direction, it runs in your direction. The car derails from the road and it falls down the valley. Same thing here. Car's driving on the road, breaks that rail, stays below, right? Keeps on driving down until it crashes, right? Or whatever, however kind of metaphor or simile analogy you want to use. Crazy, crazy, crazy. Mother bar, play. Big play. $8 play up, $10 play down. That would have made you a very, very, very happy man that day. Truth. Stock talk. Yes, so stock talk later on today. I hope that with this video, you guys were able to recognize some inside bar patterns for the coming up day, for the coming up week. What we have, all of these examples have been in the 5 to 5 minute time frame, just because this is going on YouTube. And I don't want to, like just share every single thing also, because I'm also on a limited time frame, on a limited time availability here too. But you can definitely use this in the 5 day 5 minute. Like I said from the very beginning of the video, I do use the 5 day 5 minute chart, right? Especially with inside bar patterns for intraday day trading opportunities. I will definitely take a look at the daily chart, the weekly chart, the monthly chart for something called time continuity. That is super important, guys. I'm going to be introducing this a lot more in our Discord server, and more times as we get together for times like this to learn and to test strategies and stuff like that. But underline it, write it down somewhere, because this is something that is extremely important when it comes down to price action strategies or any kind of strategy, really and truthfully. There has to be time continuity. A lot of people say, hey, this strategy works, but they're only looking at a small time frame. Or hey, this strategy works, and they're only looking at a big time frame. Time continuity strategies that have time continuity, are true strategies. What works on a small time frame has to work on a big time frame, has to work in a medium-sized time frame. Time continuity, it has to prove itself. And we'll dive into this more or later on down the road, as well as these three very fundamental questions, right? When it comes down to reading candlestick patterns, it's how the candle forms, where did it come from? I mean, I read that so wrong. Where did it form on the chart, and how did it get there? Those are very important things. A lot of times people would just say, hey, there's a green candle there, buyers won, right? Buyers have control in that time frame, whether it's a 5 minute, 1 day, 1 week, monthly chart, 30-minute chart, hourly chart. Some people will only leave it at that. There's a green candle, it's a bullish candle, buyers have control there. That's not always necessarily true. You have to understand what's going on big picture, take a step back and think outside the box. These questions right here help you further understand and recognize what's going on. Also, I'm just going to throw this out here too. There's only really, okay, I may be wrong with this, but there's really only 2 live things on Thinkorswim. The rest lag, and it's price and volume. Price action strategies, price action strategies are the stuff. I don't know if I can really say that legally or whatever, but anyways, I'll get into that stuff, further down the road too, helping our group get away from using indicators and being that kind of trader. Although I still use indicators and stuff like that when it comes down to it, but there's a lot of mumbo jumbo when it comes to using like MACD, RSI, and stuff like that. But anyways, guys. Yeah, no problem. Yeah, greed is an entity. Anyways, guys, I am going to go ahead and sign off. Let me know what you guys think about the video on Discord. Again, this isn't like the very first time I had like a live session like this anyways, but things would be a little more organized and a lot more structured also. I am going to admit too that I was a little bit nervous too, just because I love being able to talk and bounce ideas off of other people, and to be able to hear you guys as a reaction. That way it helps me steer the direction that I feel is the best for both of us, right? But anyways, thank you guys so much. I just started trading and learning back in no, totally fine, dude. Yeah, that's exactly how I was, and I was trading for like a long time, years. Anyways, guys, thank you guys so much. See ya. And now I've had no idea how to turn this off. All right, bear with me. How do you do this? Totally funny. Oh, there we go.